Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, April the 22nd, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following: do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Quick overview. We have wave one is done. We believe we're in a multi-year decline in wave two. Before then, we're reversing and going much higher. We topped out in 2022, and we're finally breaking some new lows as expected. We mentioned this several years back. As long as price remains below 109, we remain bearish. As long as price remains below 114.72, one is done. We're working on two. Fair enough. We expect at least some sort of retracement into the sweet spot area. We're finally starting to touch the 38.6% retracement from all-time high, well, not all-time lows, but from this low back in 2007 and that high up in 2022 of 114.72. So this is where we think we're going, and we'll see how that plays out, but so far so good. Jumping into the charting platform, we can see that we reached our initial targets of 98, 97 zone. We're right dab in the middle there, Mr. Tucson. So is this the end? And we're going to go breaking all-time highs. It is possible, but it's still unlikely. We got a long way to prove. So I think we're going to continue this lower high, lower low scenario. But I do want to show you something from the big picture of a recent move. Let's go back to, say, monthly and look at not just this recent low down here we've been talking about, but even if we come to a 618 retracement off of that low, we're talking around 87. So that kind of fits this same zone area. And if we extend it out to a 786, that brings us down to about 80. But if you look at this recent swing point low from the COVID lows to that swing point high, we're right at a 618 retracement, which is interesting. If you come from that low to that high, we're testing that 618 retracement. And if that holds, we could see this thing extend quite far and push us way up into the 140s. So wouldn't that shock everyone if the dollar just strengthened and we went way up here? That wouldn't be all-time highs quite here. We go back in the 80s. We're way up here at like 160-ish. Yeah, in the 160-ish area. So that wouldn't be all-time highs to come up in this zone, but it is something of interest that we're holding a 618 as we speak from this COVID low up to the swing point high. That is a 618. You know what that means? If that holds and we start breaking back out, it opens the door for us to go not only above 114, back above the zone over here in the 120s, but could extend into the 140s or more. Right? Everybody see it? So let me zoom back in and focus not on just this recent low we've been talking about, looking for that 618, 786 retracement zone. That's kind of where those numbers came from. But from this recent COVID low, which is an area, former resistance over here, support, support. So this is interesting that from that swing point to the current high, we're sitting right at a 618. Interesting. And if we go down a little bit further to 786, that would be 94. And the monthly Magic Fibo is sitting right around that same zone. So I'm not saying that this down move is totally over. No, we got to force price to prove itself. But if that holds, and then you start looking at it in this sense, let's go take a lot of this price action out of the way and expand this and look at what if we use a 3-point tool and we look at this as being the low and we go low, high, higher, low. Let me take some of this off so we can not have so many lines on here. But it is interesting to look at that and say, what if we do use a 3-point tool? We say from this low up to this high, up to this higher low. Look where that puts us. That puts us somewhere around 127, 130. We could extend out to that 140. And if we blow doors a little bit, that could put us into the 160s. And we're talking maybe even all-time highs, potentially. So don't get me wrong that I've totally changed my tune. No, but it just found it interesting from that COVID low to this current high. We're sitting and perched right at a 618 level. So that's why I'm going to keep a keen eye on it. I think the downside will accelerate once we take out the 95, 94. Then it sets the tone for our targets to the downside, right? You can see it there from that low to that high. We start taking the 618 out and the 786, which puts us at that 94 area, breaking the Magic Fibo on a monthly chart. Then we start closing below that 94 area. Then the door is ajar to go at 75%. We're going to go to 85, 70 plus, we're going to go to 82. And that fits my target zone, 82.80. So definitely see a high probability once we close below that 94. It is absolutely game on to come down here. But it is interesting that we're holding that 618 right now. And if you go from the prior low way over here, the 70 low, and we've been watching that to the current high, then we could still come down to our 618, 786 zone, would still put us right around that 80 target. So once we start to break 94, it sets the tone. We're coming down to the mid to low 80s. Amen? All right. I don't think this is over. We're bouncing a little bit today, so let's go back to the daily. I do think we're going to get some more downside. So this little bounce, no surprise, when we start to reach some of these extensions, we get a little bit of a pullback. And I'm looking for more of the same like we talked prior weeks. When we get a little rally, look for a lower high, get a little rally, look for a lower high, get a little rally, look for a lower high, get a little rally, look for a lower high. Same thing, rinse and repeat. Get a little rally, look for a lower low, not a lower high, but a lower low. On these, you lower high here, lower low, lower high, lower low. So I don't think this is the reversal, but I have to pay attention to the charting. And if it holds that 618, we start breaking out, then by all means, we can look at some new highs. But we got a long way to go. We'd have to break all the way back above the Fibo and then start talking about maybe we extend a little bit further before we go breaking above that 114 area. But hey, could be. Till price proves otherwise, we expect to sell rallies and continuation down. until price would prove otherwise. Then we'd buy and look for some massive strengthening of the dollar index potentially. Amen? All right. Well, plays been playing out beautifully. When we talk about our euro trade, it reached its targets, well, at least the initial targets, and no surprise, it's pulling back a little bit. Next target up is 1850. If the dollar continues to break down like we anticipate, this should continue to climb higher and could extend to the 30, 28, 25, 28, onward and upwards to our target. That's kind of the plan. But remember when we talked about this not long ago, that this was going to bottom and this would be a high probability trade. We were going to go breaking out to the zone, which is well over 1200 plus 12 to 1400 pips from 101 up to 113, 115. Been there, done that. And even early on, we talked about at least getting to the Magic Fibo. Wow. Technical analysis has always been my thing. And I don't trade the news, I trade the aftermath of news. So I can't go what I listen on the news media and the talking heads. I base it all on the technical picture and, of course, the way the software sets up. Well, what do we do on Tuesdays? We look at Elliott wave. And I don't know if everybody likes Elliott wave or follows it, but that's my job. And even when we talked about this being potential 1-2, 1-2, and we had this, high, low, lower, high, higher, low, 1-2, 1-2, and we're going to go breaking out, we said that, well, if we don't and we end up breaking this low, I remember that statement in the archive, I wouldn't make a big thing out of going short here, maybe a couple hundred pips, but it ended up going right to our target of 102. Remember, we talked about that. Well, if we break this 104, we're going to go to 102, and it's a beautiful low to high, a 618 retracement. So this is why this 618 holding, what did the euro do? It's breaking out. So what if the dollar from that COVID low to the high in this breakdown now holds at that 618 and goes breaking out? Then you got some upside targets, just like the euro currently has. Well, if the dollar was to go up to the 140s, 150s, 160, it would just krill. I mean, it would make these currencies crumble. It would literally crumble those other currencies. Interesting. I don't think anybody's talking about the dollar surging to such lofty levels, but hey, we got a force price to prove itself. What if that happens? Well, if we get to the breakout, then we're just going to reverse gear and look for the euro to go much lower. But for now, all roads lead to more upside. And as we showed you here, right to the targets, like a heat-seeking missile. Look at that, Mr. Tucson, Ian, James, Emil, right to it. Beautiful. Now what? A little bit of a pullback. Well, let's come back over to the charting. This breakout looks good. And should we see continuation where we believe we're going? Until price says something different, all roads lead to much higher highs. Amen? In the short term, why are we getting a pullback? The daily's overbought. What did we talk about this in the weekly cycling up? The daily would cycle from oversold to overbought, start slingshot palooza higher and higher and higher and higher and higher. Well, look at the weekly. It's in overbought territory. Who could have guessed? Who could have thought? Who could have anticipated we were going to get a weekly cycle up? We talked about that a long time ago. We even drew this monthly, and we said the monthly was very unlikely, use my arrows, that this was very unlikely going to go ahead and cycle all the way down, that we were going to see this slingshot back up, and that the monthly PAI and trend momentums would start reversing, going back to overbought. And in order, if we get up here like the plan, then I suspect we're going to get overbought and start this slingshot palooza to the upside on a monthly. which would allow us to keep grinding higher and higher into the zone. Amen? But like I've been showing on the big picture, the big picture is this Elliott wave. So once we get up here, what do we look at what we're doing? We're going from A up to B, then back down in C. All this is a retracement into that 618786 zone. That's what we believe the euro is in the process of doing before years later, we're going into the 2030s, 2040s. I mean, this could take multiple years to get up here, as we had discussed. But once we're finally there, then we look at a big, could be an extended wave C down. And if the dollar does ultimately go to all-time highs, the euro dollar is going to go to all-time lows. And we don't have, I guess I could do it over here, has more data. But if you look at the euro and you go all the way back in history, far back, we can see we've had some, and don't go far enough back on this one. Let me see if I can find another one. Come over here. Euro dollar, who might have more data out there? Check FXCM maybe? Yeah, FXCM seems to have a bit more. But we can see way back in 71, we were way back at 0.54, back when the euro started, way back. So could we get to those lows again? Yeah. If the dollar goes to all-time highs, you would expect this euro dollar would go to all-time lows. Now imagine that move, James. We go up here from our 145 zone, 140, 145, and then the dollar does the big reversal, 1-2 going up in 3, and we start shifting and we go way up. Well, with this new contract negotiations of world trade, if we get really good deals across the board, that could really strengthen our dollar in the decades, not just months, weeks, etc., but we're talking the decades to come. And this could take decade plus for us to go shooting into the 140s, 150s, 160s on the dollar. Which would that mean for the euro dollar? It would start shifting us way down. And if that's a big A, B, and we're coming back down in C, yeah, we could see some uncharted territory on that euro dollar to the downside. Now, that again is probably decades away before you would see something like that. Well, why are we even talking about it? Because that's what I do all day long. Look at the charts. So, back to current price action. What are we expecting? I'll go back to my usual, and it has all my charting on here. But this is the targets. Congratulations if you took place in our setup here. What's next? I think we're going to get lower highs, a little dip for a higher low, and then a higher high. I do think we're going to continue. And the same would be for the euro dollar. We could see much further upside, sure, but we need a little bit of a retracement. That's where the software comes in. And we go to the daily. Come over here. This is the monthly. Go to the daily. Again, we're overbought. So I'm looking for at some point between the daily being overbought, the weekly and overbought territory. Now, the key about this software, just because it's overbought doesn't mean you have to have a reversal. It's when the PAA starts to hook right there, price action indicator, we call PAI, and then the trend momentum, the TM for short. When we get a hook and a cross down, then it means the lower time frame cycle. So go back here, when that weekly hooked and crossed, and this is right here on a weekly, that meant we were going to see a daily cycle down, and even a monthly was beginning to show signs that it was turning over. So why did we get that weekly cycle down? Right here. The monthly did a PAI hook, trend momentum cross. We had slope, angle separation down. So we got the weekly cycle down. It looks like just 3 months of the euro pulling back right there. PAI hook, trend momentum cross. What happened at that point? The weekly went from overbought all the way to oversold, trend momentum overbought all the way to oversold. That's why we decided to buy this dip, because now my weekly was oversold beginning to hook and cross. So the uniqueness is, as you well know, when a monthly hooks and crosses, then we're going to get years of upside pressure. When a weekly hooks and crosses, we know that or in this case, the monthly hooks and cross, the weekly cycles. So it usually takes about 2 to 5 months for a weekly to cycle. For a monthly to cycle, it takes somewhere in the neighborhood of 2 to 5 years, right? So we can use options for these. When our weekly hooks and crosses, the daily cycles. So whenever you see the higher time frame, like a weekly hook and cross, PAI hook, trend momentum cross, the probability, the lower time frame in the case of a weekly hook and a cross, the daily would cycle is extremely high probability. And a daily takes about 2 to 5 weeks to cycle. So when I see these setups and I get a weekly hook and a cross, I know I have 2 to 5 weeks for a daily to go ahead and cycle. Highest probability. When a daily hooks and cross, the 4 hour cycles. When a 4 hour hooks and cross, the 1 hour cycle. When a 1 hour hooks and cross, the 15-30 cycles. When a 15 hooks and crosses, the 5 minute cycles. When a 5 minute hooks and crosses, the 1 minute cycle. It's like clockwork. So that's the key. So this is why I'm telling you, we're probably going to get some sort of little chopping, consolidation, a little bit of a pullback. And what am I expecting? Even if this daily forces this weekly starts to hook and cross down, we might get a daily cycle down and then start to process, and the weekly's likely to start slingshotting higher and higher and higher. Why? Because my monthly is up, right? We got steep slope, angle separation. So Ian, there you go right there. What is that? We call that steep slope. We call green above the red. We got angle and separation between the lines. So with a monthly smoking to the upside, another reason we might get a little bit of a pullback, we're running into the Magic Fibo on the monthly. See it? So back over here to the charting platform, we go to that monthly chart, see the Magic Fibo, and we're right at it. You can see just a little piece of it here, but right at it, you see it, we're testing it. So this is potential. We will see this little bit of a pullback. We're running into this from below. That means it's like resistance. What did we do here? We ran into it, got rejected. We ran into it. This time I think we're going to make a little retracement before breaking and going higher. But once we clear that hurdle and we get above the Magic Fibo, then it sets the tone. We're going to our 140, 145 target. Now, again, I still think we're years out on that. But it's interesting how, between the software and the technical picture, it's setting up a beautiful thing. So the monthly straight up, my weekly cycled because of the hook and the cross. So what are we saying one more time? This slope where the PAI, red, blue, and green, all hooked, goes back months ago when it first hooked. Then we got the trend momentum cross. We got a hook and a cross. That told us weeks and weeks ago this weekly was going to cycle. And what is the cycle? When the PAI goes from oversold to overbought, when the trend momentum goes from oversold to overbought. So that's a high probability. That's why that 113, 115 target was such a high probability target. We had what we needed months ago, and then weeks and weeks and weeks later, we finally got there. Now what? The monthly's still up. The weekly may, it doesn't have to turn over to slingshot. It can just kind of grind sideways, potentially doing a little slingshot or even just drift sideways while this thing could continue to go higher. we could go ripping up here to that 118, 120, and we could just kind of flatten out up here, right? Just kind of flatten out. We see that in past times when it flattens out, it continues to go. So I'm not trying to tell you that the euro move is over by no stretch. But as my weekly and daily start getting overbought, we may need a little bit of depressurization to then slingshot higher. So I'm watching this very closely. What does this do for me? Everyone says in a market, you buy the dip. We're in an uptrend, buy the dip. Well, what is the dip? Is it 10 pips, 20 pips, 100 pips, 500 pips? What is the dip? That's where the software comes in, right, Mr. Tucson? James? We get a weekly to hook and cross down, then we know we got extreme highest probability the daily is going to cycle down. So if I see this weekly hook and cross, a little slope angle separation, like over here when this hooked and that crossed and we had slope angle separation, then I salivate when my daily gets oversold. And that would tell us, well, is it 20 pips, 50 pips, 100 pips? When that daily gets oversold and starts turning back up, that's when you buy that dip. We're not there yet. So what about this pullback on a smaller scale? Well, what if the daily ends up giving us a hook and a cross? What did it do over here? The PAI hooked, slope, the trend momentum cross, angle of separation. When we got that hook and cross with angle of separation, what happened? Right there in that latest little pullback. When we got the hook and the cross, slope angle separation, and this is on a daily chart, guess what happened on the lower time frame? That 4 hour went from overbought to oversold. How about that? Isn't that a thing of beauty? So that's what we're talking about here. So again, I think we should buy the dip, but is this dip done now or are we going to go further? That's why I watch these levels. Well, what if my 4 hour ends up like you see here? We got a hook and a cross, slope angle separation. So that tells me the 1 hour is going to cycle down. What did it do? It cycled down. Interesting. It's like clockwork. So is this dip over here or are we going to see more? And is this 4 hour done and we're going to start reversing? Or is the daily ultimately going to give us the hook and the cross down like there so that that 4 hour goes oversold? So even as a scalper, if I get the daily to hook and cross down, then I can salivate as a scalper once the 4 hour gets oversold and hooks up to buy that dip. Get my pips, get in, get out. We're in this for the long haul. 2+ years ago, going on 3 years ago, when we were down here at 0.95, what did I say? Highest of highest probability, we're due for a sweet spot retracement off of the all-time high to this low. We're due for that sweet spot retracement. Here it is on the monthly. All-time high to the low. We're due for sweet spot retracement, and we're looking for a little bit of extension between the 618 to 786 zone. That's where I think we're ultimately headed. But remember, this is not a breakout to go to all-time high. This is a retracement to then reverse and go much lower. That's what this picture is telling us. Once we finally get up there, what comes after A goes to B. Once we reach this B, what then? I'm going to go short for many years for the euro to go much lower and head down back to below parity and then some. In this little picture we talked about a moment ago, looking at the dollar index, once wave 2 is done, we go up in 3, and I see the dollar potentially strengthening massively in the multiple years to come from there. Again, this could take decades before we finally get this move and then we'll reverse and climb way up there. But that bigger picture is what it is. So, any questions? that I'm watching this very closely to see if we hold from the COVID low right here, this COVID low, we're at a 618 retracement. We break that 94, it sets the tone into the lower 80s, mid to lower 80s, and that's kind of where we think we're headed from the low back in 2008 up to the high. You're still talking into mid 80s for 618. Look at the 786 zone, right around 80. So, Emil, when I threw that out, how many months and years ago? Oh, we're going to go and we're going to look for the dollar to make a move toward that 80 and lower. I've been saying it for 3+ years, right? And that's where these numbers came from. It didn't just randomly go high. We'll say, well, Gary, before then, when we were there, when we topped out, that kind of set the tone for at least 90 retracement, 80s, and then lower to 80 down here. Then you start doing the extension from the low, the high, higher, low, etc. So you start looking at these different moves. And once we're down here, I think we're going to go much higher. Even if the dollar goes to these lower lows, then yeah, maybe we could see the euro and the pound go on to new highs, but I don't see that. I see this as a big three-wave move, and we're now starting to trek in an upwards direction, and the dollar should strengthen dramatically in the decades, not months, weeks, or even year or so. In the decades to come, I see some big things for the dollar. But for now, we're still probably going to go a little bit lower before we're done. That's why we're staying sell the rallies on the dollar, buy the dips on the euro and the pound, and look how that played out for us in a thing of beauty. So, any questions where we think we're going? Again, I think we're ultimately going much higher. The plan is to make that 618, 786 zone and a retracement for this, which happens to be in my 140 to 145 category. So I do think we still have thousands of pips to go before we're done. And short term, for those scalpers, I'm watching this very closely to see at what point do we get a weekly? Does it finally hook and cross? If not, do we get the daily to hook and cross? If we do, then we know the lower time frame, which if the daily hooks and cross, the 4 hour will cycle down. When the 4 hour gets oversold, I set the software and I could set it to buy the dip on a 4 hour when we get a trigger higher. When we get a trigger higher on a 4 hour is when the software is oversold and we get that trigger to go higher. So that's what we're looking for. Potentially seeing we get the daily to retrace and hook and cross. The 4 hour will cycle down. Those of you that like Ichimoku Cloud, another thing that it's interesting about this software, it's been fine-tuned with Ichimoku. So if a daily hooks and cross, what do we say? The 4 hour is going to cycle down. And when you're talking Ichimoku Cloud, it's going to get sucked and pulled into the cloud like clockwork, like a magnet. It's just going to suck it down in there. Now, we don't have the daily hook and cross yet, so I'm not saying I guarantee the 4 hour is going to cycle all the way down and we're going to get sucked and pulled. But what if we do? When that 4 hour gets oversold and it hooks in the cloud area, I'm looking to buy that if we can get that far of a pullback. Amen? All right. What else? Continue. So any questions on the euro and the pound? The pound's in the same boat. We're aware we have reaching toward our extensions in the pound dollar from the recent high to low. We're not quite there. 136, 138 area. We're almost there. We got to 134 and we're getting a little stop pull point from that point here, prior high, just testing it again. And I would not be surprised to see some sort of little pullback before we then go breaking out. But just like the euro's already reached its targets, the pound is yet to reach its target. No surprise, it's that much further to go. When we talked about buying this 121 down here, you're talking 1500 plus pip move. That's what we're in the midst of. If you are following this and participating in that trade, even as we got this pullback here, it was like, man, I even drew this picture a long time ago, right, Mr. Tucson? Once we finally work our way to this take profits here, we get a little pullback. And I would suspect once we go breaking out, we're going to come back and retest the daily to then go bouncing before we get to these highs. Remember that? That's in the archive. And what happened? We went right to the Magic Fibo, the bounce off of it. And now we're headed where? 75% chance we go on to 136. 70 plus we go on to 138. Stair stepping way we go. So am I saying you should buy now? You should have bought way down here. And then we could have bought here. A lot of times we talk about adding to our position, keep buying the dip. Ever since this low, I kept saying, keep buying the dips till you get to the Magic Fibo. Once we get there, expect a little pullback, then buy that dip. And then once we go breaking out, likely going to come back and retest the Magic Fibo before we bounce and get up here. As if I could read the future, read those tea leaves. Well, one thing we don't do at GPA Trading Services is we do not predict. The weatherman predicts. Every Tom, Dick, and Harry predicts. My prediction. As James knows, we leave the predictions to the prophets. And even as sometimes price plays out, God-given talent to read and interpret price, it's a wonderful thing, but I anticipate with the best of them, highest probability setups, but we don't predict here. I leave that to the prophets, and believe it or not, I'm not a prophet. All righty, I digress, but where are we headed, Ian and others? Keep buying the dips. We're going up here and eventually up here, and the goal is to get somewhere probably about that 160 to 165. If the dollar goes where it's supposed to, then that's exactly where these are going. We spend so much time on the dollar index because once you know where the dollar index is headed, you know a lot, high probability where a lot of asset classes are going. So if this plays out and the dollar does make its retracement toward 80 or lower, then the euro, no questions asked, is going to be, actually, euro, no questions asked, is going to make this retracement up here around 140, 145. And if the dollar index goes to 80 and lower, then the pound dollar is going to go, no questions asked, up near this 160, 165, somewhere between 157 and 170. And then the same thing with the pound. What happens after we get this retracement into this rejection zone? Then what? We're likely going to come back down to parity and below. Similar to the ABC of the euro, similar type ABC for the pound. Amen? And that would mean our dollar is going to go ripping to all-time highs, or maybe not all-time highs because that's up at 165. But if we get way into the 140s, 150s, we're definitely taking this low out and making new lows. But again, that's probably several more years before we get up here and multiple more years before we come back down. But I like to give you the big picture, long-term picture. Right, Ian? How many years ago did we talk about when the euro was way up here? Hey, the euro's going to parity and below. Huh? I didn't know it would take 15 years. I knew it would take years, but I didn't kind of settle on 15 at the time. But sure enough, we went to parity and below. Now what? Simple retracement into a 618786. We're extending it a little bit where the pound is at a 50 to 61 zone. We're expecting the 61 to 786 zone, but all roads lead to the same technical picture. You get a big push lower, you get a retracement into this 618, 786 zone, and you get rejected. That sets the tone for new swing point lows. And that's where I think we're ultimately headed. First things first, we got to get up here. Then we can go, as I was short many, many years, I'm now long 3 years and counting and continuing to add to my positions, buy the dip along the way. And this is where we're ultimately headed. In the short term, again, because I know people out there, I want to know, I don't care about the thousands of pips already missed. Well, we're going to have an opportunity for a little dip and a continuation as the euro is expected to go up to 118.50 and the pound is expected to continue its journey. But what's the next targets for the pound? It is that 136 right here, 136, then 138. After that, we're talking the 142. Euro, same thing. We already reached the 136, the 114.95. Bingo, did it. Now what? Continuation toward 118.52. But I'm warning you, as the weekly's overbought, the daily's overbought, we may get a retracement, potentially 4 hour retracement, maybe even a daily retracement. Then we just buy the dip and we shoot for the next target. And the pound, we're not even to our initial targets, 36, 138 yet. But what a move from 121 to 134. That's not too shabby. And we got a few more to go. Then what? Stair step. Then we probably get another little retracement before a continuation up toward 142. Any questions? So keep buying the dips, as we said way back here at 121. And we said 3 years ago when we were down here at 103, I was like, man, we're so overshot on the downside on this. We're at least going to get a Fibonacci retracement from that prior high. And that's where the monthly comes in. And we've been showing you this from that monthly view. It's a thing of beauty, right? From all-time highs over here at that 211, 210, 211, down to this 103. We're looking at a what? Somewhere between a 50% to a 618 retracement. So that's why I think we're headed somewhere between that 160 to 165 is kind of my fine-tuned target. And what does that say about the pound long term? High, low, lower high? Do the math. Lower low. Whoops, lower low. Got it? So we're talking years out. I still think we're years away from getting to our target zone. Then we're multiple more years before we reverse and head back down. So keep buying the dips short term. Expect this to go to that 136, 138 range. We're still at a 75% chance we're going to 136, 70 plus we're going to 138, and onward and upwards to 142. But remember, even as we get to these targets, I'm not expecting just to go straight up. I look for it to pull back, stair step, ping pong between these levels before we finally get there, and then probably another pullback before we continuation and ultimately head toward the 160 area. Dollar yen, anybody in that trade? We're only a few hundred pips from our target. There was just the other day, right, James? 146 broke. We closed below. What did I say? 75% chance we go on to 136. And here we hit a low so far of 139. 300 pips away. Not too shabby. That means that's 700 pips of our target. Hopefully, all of you have been following along and participating. I cannot tell you what to do. I'm not a certified financial planner, so I can't tell you what to do. I just can tell you what I'm doing and what the technical picture said. We're still got some more downside before we're done. and here's our target zone. Amen? All right. Pound dollar has been lagging, and we're not even to the point where we can set this trade up, but I'm watching that very closely. If the pound does the same thing where it breaks below, then we got a 75% chance we close below 187. Notice this wick came below 187, but it didn't close. So it's not the wick, it's the body. Once we close below 187, we're looking for this 177, 175 target. Keep an eye on that one. That's your 1,000 pip potential trade setting up there. And the dollar yen is already 700 of it, of that 1,000 pip move we discussed. Let's continue. We've got a lot to cover. What about the tariffs? It's all about the tariffs. That's what's doing in this market. It's crazy. Well, this is looking good. What did we say before we got up to the daily Fibo? That as long as we stayed below the prior swing point here, which was support, and that recent rally to the resistance, can't make this stuff up right here, Emil. Right here. James, Ian, Mr. Tucson, Mr. Walterstorff, all of our archivers. That zone, as long as we stayed below it, what did I talk about? We were due for a 618 retracement. Now what? Bingo. This is setting up a push toward the Magic Fibo. So ES traders die and go to heaven on 1 point. We're talking about 500 points, less now since we bounced off of that zone, up here around that 5,700. Now, this isn't all clear to go to all-time highs just yet. We still have to clear this Magic Fibo, and we still have to clear the 618, 786 to the upside. Once we do that, then it's all-time highs, 63, 65. We're not there yet, but this move so far, and once we got here, what was I talking about? As long as we stay below that battle zone, we're due for 618 retracement. Then look for a bounce for us to go up here. So right now, all roads look like we're going to make a run toward that 5,700. NASDAQ, ditto. We got a beautiful 618 area retracement. We're bouncing. So all roads is leading from this recent high to low, a move toward the Magic Fibo up here about 20,000. Amen. Another couple of thousand points. And we bounced off of 17-ish. Now we're going to 20. So a total move from this reversement from 618, about 3,000 points. Not too shabby. So highest probability, the bias is keep buying the dips as long as price holds this zone. Keep buying the dips, looking for it to go toward the Magic Fibo. If you use a 3-point tool from the latest swing point low to the swing point high to this higher low, look where it sets us. Not only to the Magic Fibo, but we start talking 21, 21.3 up to 22. We start breaking above the Magic Fibo, then it sets the tone because look where my 618 is, right around that 20,002. So we start breaking above this Magic Fibo. Not only is a shorter term target 21,000, 21,380, but by closing above that zone, then it says, right, doing the math, we have a 75% chance we go into 23.3, 70 plus, we go into 24. And I think this will take until the fall to get up here. It's kind of what the time frame we're looking at. Breakout into the 24, 25, 26,000 range in the fall. But by no means is this set in stone because, yes, I think we're going to go up here and test this zone, but this is still big resistance. 618, 786 from the prior high to low, which is right there. That high to this low. What we don't want to see, remember I said this weeks back, We don't want to see after this pullback a three-wave move that stops in its tracks there, then breaks back below from the low to the high, a 618 zone. Then it sets up new lower lows. But if this bounce and we do break above the magic Fibo and we do clear the hurdle, then it's clear sailing, which I think we're the direction we're headed. We're going to go breaking out. We're going to come back, retest the magic Fibo, which as you start climbing up, this thing will start flattening out. Then it'll come bounce off of there before we can get to these extensions. Just like I said with the pound dollar, we're likely going to go breaking above, come back and retest before we can get to those targets. I think the same for the NASDAQ, ES, etc. We're below the magic Fibo on a daily. This little 618 retracement setting up beautifully for our move to that zone. But if we can clear it and close above that zone, so we need to get above 20,200 area, which would be above the magic Fibo. That's good. And a big daily candle body close above that zone. It sets the tone. We're going to 23, 24. And once we get there, then it's a little easier breathing. Now, what it doesn't mean when you finally close above here, we're going to go straight up every day without any type of pullback. And the next thing you know, maybe a couple of days later, you'll be at 23. Another few days later, we'll be at 24. No, you always stair step, right? Always going to stair step in that equation. So, any question? This looks very bullish. We did a beautiful 618 retracement. It did exactly the same thing. Prior support, bounce, bounce, bounce. We broke down, we retested during that bottom, and the tariff talk and the doom and gloom, and Wall Street didn't know what to do. They know exactly what to do. It's a rigged game. They got more money than we do. They got more insight than we do. They have more than everything. That's why you have to use these tools and strategies that give you an edge to take advantage of these type of moves. So with this holding, this clearly sets up a move toward 20,000. Highest probability right now, right? So once we get there, this could set up doom and gloom. If we fail and we can't go breaking the zone to go to new highs and we get rejected, and then we see something like this. So we do a new 2-point tool and we say, okay, the current low is here. And if we go up into this zone right around my 618786, the magic Fibo, we come up in there and we get rejected. Then we come back down and we don't hold this, say, 17,000 range, 17.5 to 17. This zone in here, which from that low to that high, sets us up right around that 18 down to 17 and change. So if we don't hold that, AKA, for example, price rallies into here, gets rejected, and we can't hold that 18 to 17.5 range, then it sets up a high probability we will make another new low. Amen? We don't want to see that. If that happens, it could set up the big doom and gloom. Well, bear with me, even as we get this blow off top. Back in the dot-com bubble burst, we got a blow off top. Then we had the big financial crisis. Back in 2007, 2008, we got a blow off top. Then we had the big Elizabeth, I'm coming to join you. So if we do get this thing to rip up here into the fall, that's the blow off top I'm looking for to set up the Elizabeth, I'm coming to join you, honey, and the big mat down move we've been talking about. So I'm still holding true to my original statement. Before we break 7,000, we're going to break 4,000. And if we get that blow off top into the mid sixes up here, then we're still going to go below 4,000. And the only thing sitting below 4,000 happens to be my monthly magic Fibo. See it? That's below here. And this sets up a multi-year decline once we get that blow off top for us to head down to 35. That doesn't hold, then we could even go lower than that. And we showed you this picture to kind of put things into perspective. This is a bubble pattern. Way back to .com bubble burst and we fell. We got a blow off top. Then we cratered. We got a blow off top. Then the financial crisis. Then we cratered. And this ultimately big correction took about 13 years from the time we bottomed, reversed, to do a big three-wave correction. Since this 2000 last financial crisis of 2007, 2009 reversal, that's been a bubble pattern. Psychology of a trading cycle, of psychology of cycle. So that's telling me, Mr. Tucson, if 3,500 doesn't hold, we're likely coming way down and potentially even retesting this 1,500 zone. Ouch. So it doesn't matter who's president. Doesn't matter if we have tariffs or no tariffs. It doesn't matter if we're green or not green. It doesn't matter of any of that. It's the technical picture. It always happens. And I showed you that chart from that author back in 1800s, did those cycles of the market, and he's showing way back in 1875, did his, if you will, predictions. And it's shockingly how interesting that plays out that far in advance. So that's setting up the big correction down into the 2030s. So we're going to top out in 25, 26, and then start making that big correction down into the 30s. That's kind of what the technical picture is showing. Amen. So any questions on that? But this bubble pattern, all of them do it. What are we looking at when we talk about a bubble pattern? Look at SMCI. SMC, not one, I. Remember SMCI? Look at this bubble pattern. I even warned you about this one. This thing went vertical, totally vertical, just consolidated, went straight up. Everybody was telling, even your gardener would say, man, you need to buy some supercomputer, SMCI. That's that psychology of a market cycle. Look out. What happens after? I warned you about this one. Boom. Not only came back to the plateau, but actually dipped below. See it? So this happens over and over and over. And if you think SPX is exempt from this happening, you will be rudely awakened to the reality when we get Elizabeth, I'm coming to join you, honey, and we end up below 3,500, which is testing that magic Fibo here. That's why I said before we break 7, we're going to break 4. And that puts us back into this plateau zone and even lower to get us down here. And that's why I showed you that much bigger picture back when we saw the prior market crashes, big time moves. I guess we'd probably do it a weekly and zoom in on that. But it's the same rinse and repeat, right? So this is why, yes, I think we're going to get a blow off top, but once the blow off top hits, you need to be mentally, physically, and spiritually prepared for, as I think, in late fall, maybe mid to late fall this year, or maybe it's pushed out into early next year. Timing is the hardest, but the technical picture is talking about a massive correction. That's why I said before we break 7, we're breaking 4. Amen? And if that 3,500, which happens to be the magic Fibo on a monthly chart, if that doesn't hold, then where are we going? Likely going to go testing this zone up here, somewhere between that 25 and maybe 1,500 zone. Amen? But minimum, we're going to come back to 3,500, bare bone minimum. And that's pretty significant. We get to 6,500 and we go to 3,500, big move. But on the brighter side, the technical picture is what it is until it changes. And right now, with the 618 retracement we've been talking about, spot on that we needed. So I'm just zooming in. That spot on move we've been discussing, we're likely due that we have this swing point, which we could not break. We were likely going to get a 618 retracement out of that before we bounce to go back up. So those of you trading the ES, highly likely we're going to visit that 5,700 zone. Good news is from the high to the low, we started closing above that magic Fibo in this 5,700 zone. It'll set the tone. We're going to 63, 65. Amen. So short term, do I expect this to get there by tomorrow? No, but I expect to see some stair stepping higher toward that 5,700. We break that, which is above the 618 from the prior high to low, right, Mr. Tucson? We start closing above the magic Fibo, bingo, sets the tone, we're going up. Just like it did on the euro trade, the pound trade, etc. Doesn't matter the market, works the same. Amen? Any questions? So, what else? NASDAQ, same thing. We're going up to the 20,000 range where the magic Fibo is sitting. We start breaking above that, which is above the 20 plus. There you can see the 618 right there from the prior high to low. Start closing above the magic Fibo and the zone. Then we have a 75% chance we're going to 23,000, 70 plus we're going to 24. And this is part of that blow off top I'm looking for into the 24 to 26,000 range before the big one comes. And it's a matter what's on the chart, not who's president, not if there's tariffs or no tariffs or this, that, or the other, or is there war? Is it this? Is it that? The technical picture plays out, and they always try to put a reason behind it other than saying the technical picture is what it is. Go back to that 1875 zone that shows when the ebb and flows. When is the best time to make money? Just 1 second. I think I might be able to find that. Let me see if I can get that for you. It's interesting to see that. There we go. So this gentleman back in 1875, Samuel Brenner, I think his name was. Anyway, we look at the cycles, and it's not always exact, but the Great Depression coming in, then we got a bounce, and then we see the recoveries, and then the big expectations. Well, look at what's coming. 2026, we expect to go down from somewhere at 26 to 32. Then a nice little recovery between 32 to 35, then another big push down from 35 to 39, then a recovery to 43, and you just go through the big times. COVID, that was even in the charts, like what? The dot-com bubble burst here, the big financial crisis there. I mean, it's amazing. This was back in 1875. So this is what this is telling us, somewhere in 26. Again, sometimes a little bit a year here or there. The timing is not always precise, but technical pictures lining up with this move between 26 down to 32, we're going to see some corrections. And just even when we go back to that 2007 financial crisis, we didn't bottom in 2012. We kind of bottomed in 2009. So by 2012, we were already in our big run from 12 to 19 into COVID. But it's interesting how this sets up, isn't it? And we got a little retracement in 2023 and 2022. We saw a little bit of that during this pullback. So this is screaming, yeah, the technical picture says it. And this says that blow off top, like the last one in the financial crisis, we're due for a nice big down move. Amen? So that's why I'm very bullish short term, and we're probably even going to get a blow off top. But then it sets up the big picture. Well, you saw where it met for the ES. What does it mean for NASDAQ? Look at the monthly on this one. It's way down here about 10,000. Ouch. We could be in 24, 26,000 and big retracement over the several years to come in that big down move and come down to that magic Fibo on a monthly. Yeah. Look at this bubble pattern. This is the monthly view of that bubble pattern, but this is where we topped out in the dot-com bubble burst and the ES during this into the financial crisis. We actually rallied back to make double top here. Let me show you what that looks like. SP, we get a double top during that period. Then we hit the financial crisis to make a new low. With NASDAQ, we didn't. We got a much lower high, and then we didn't get a lower low like ES. So a little bit different in the markets, but the same principle. We're due to come back toward that magic Fibo on a monthly chart. We did it in the last financial crisis. If this would extend further, would have done it then. We done it back in the dot-com bubble burst. So this next one, when it comes, I don't know what they're officially going to call it, commercial real estate, the tariff bust. I have no idea what they're going to try to put a label on it, but it still says the same thing. We're coming back toward that magic Fibo on a monthly chart. And could certainly, we don't hold 10,000. We could even go a little bit lower. Ouch. But good news is on the lower time frames, it's looking great for us to go up another couple of thousand points. We did a 618 retracement. We're standing firm here. Likely we're going to make a move toward that 20,000. Amen. So keep buying the dips until we get to that 20,000-ish. And if we end up start closing above the magic Fibo, then we're game on for our blow off top, 23, 24, maybe 25, 26 zone. All right. And when should we get up here? Sometime probably the fall. So we're not talking this recovery 1, 2, 3, 4, 5, a week or so. No, we're talking months to get up here. Amen. So this is what we discussed when we couldn't, this battle zone here, support, turn resistance, and we couldn't break it after testing it a few days. What did I say? We need a 618 retracement. Beautiful. Now we're bouncing to go back up. And if this plays out like we expect, Mr. Tucson, this kind of looks like what we're doing. We're going to go up here. When we finally break above the magic field, we'll probably come back to retest it before we get to these nosebleed blow off top. Would not be shocked to see us break above the magic Fibo, come back to retest it like the pound dollar did to then reach its targets. Same thing here. I would not be surprised to see that happen, and even on ES. Highest probability, hint, 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 based on that move, we're going to 57. And if we start closing above, would not be surprised to see us break above, retest before we get to these targets. First things first, we have to close and break that 57 to 59 zone. Even at 56, kind of remember we talked about that the last several weeks. 56 to 59 is critical. And if we rally into that, get rejected, it could set up new lows. Or if we start breaking above, then it sets up highest probability 63, 65. So we're going to force price to prove itself. And right now, price is proving it wants to go visit the 5,700. NASDAQ is proving it wants to go visit 20,000. QQQ, if you're trading this, and we're talking about that 490 range. And if we can start closing above, same rule, we need to bring this down. And that's a 3.2. Let me take that one off. But a 2.2 on the QQQ from the swing point high to the swing point low more or less in the same boat. When we start breaking above this 488 area, 490, that sets the tone. 560, 570. Maybe we get the blow off top to push a little bit further toward maybe 600. Any questions? So highest probability based on this what? 618 retracement. From that low to that swing point high. Beautiful. Emil, Mr. Tucson, James, Ian, you can't make this up. Perfect bounce off the 618. So where are we likely to go? Up here to the Magic Fibo. And if we do go the blow off top zone in the 560, 70, 600 range, then I would not be surprised. We get up here, we get a little pullback, we break it, we come back to retest it before we can start getting to these upper quadrants. Amen? So I don't care how you trade it, it's up to you. But this looks like a strong, beautiful 618 retracement extension headed toward the Magic Fibo. IWM is the only one that's a laggard, but it's still likely going to move. And if we can get where we're talking about in all other cases, highest probability we will make all-time highs on ES, especially once we get up here and we can close above that 5,700 area, then it sets the tone. We're going to go to blow off top and all-time new highs. NASDAQ, same thing, just repeating. We can get above that 20,000 plus, this target up here above the Magic Fibo. Then we're talking blow off top, 23, 24, 25, maybe 26. Well, Russell is the only one, even with everyone doing a blow off top, the blow off top on the Russell, in my humble opinion, is a retracement back toward 2,200 area. I don't think we're going to go all-time highs. I think we're going to get a big retracement into this upper quadrant, my 618, 786 zone, which is this big pink box. And I think we're going to head somewhere between that 22, maybe 2,300 area based on the high to the low. So where everybody else is in blow-off top territory, we're at a lower high on the Russell. So if you're trading IWM, we talked about buying in the zone. Actually went a little bit lower than the zone, but still likely going to get this rally up here. And what happens when we start getting near the Magic Fibo, somewhere between that 216 and 228. So let me put a little box up here. I do think we're going to go testing this area up here, somewhere in this zone. And this will be our so-called blow-off top for the Russell, which is a lower high, but it's like its respective blow-off top. And then we're going to look for a big move lower. So this is setting up a great opportunity once we get these blow-off tops for all markets to give us the Elizabeth, I'm coming to join you, honey. But we're going to break below 1,600, which is our 160 area, and start targeting probably somewhere around this 130, 120 zone down in here. From 220 down to 120, that's a big move. Big move on IWM. And we're talking years to probably get down here. I don't suspect we can get from 212 and 6 months later we'll be all the way down in 120. I think it'll take a little bit longer than that, but I do think that's part of the Elizabeth, I'm coming to join you, honey. And it's no surprise. We've been talking about this with IWM or with Russell from the bigger picture. All of this overlapping, chopping, grinding, grunting action, we've been saying it for years now. During this break top in 2021, when the NASDAQ, the ES, and the Dow all went to all-time highs, all-time highs, all-time highs, Russell started correcting, and then we got these pullback. And then even as the ES NASDAQ went on to make numerous all-time highs, Russell did not yet again. So this is why these big numbers down here are screaming, and all of this overlapping chopping action during that rally. What did I tell you? We have to come back below that 1600, 160 area on IWM, and likely going to go breaking much lower. But even with this next move, we're looking for a lower high, lower low. Amen? Clearly, we're going to break this 160 before we go breaking that 250. All-time high area. Before we go breaking all-time highs, we're going to break 160. And even as bullish as I am short term, that we're going to go rallying higher, I'm looking to salivate to do maybe a debit spread to the downside. Debit put spread, looking for this. Somewhere between that 220 area down about 140, maybe 120. Big move down because technically we have to break 160. And even from 220 to 160 is a huge move. But we're definitely going to take that out. And I think we're going to go below the monthly and put us down somewhere around that 140 to maybe 120. If that area doesn't hold, we could even come down close to parity. I mean 100, not parity. Amen? You can see the extensions down here. So around that 110, 100. If our 140 to 120 area gives out, we're going to 110, 100 area. All right. All righty. Any questions on that? Moving forward. Dow, it too, no surprise, made a 618 retracement. And it's a thing of beauty, right? Came down to 618, 786 zone from the prior low to high. And now we expect the Dow to do what? Start heading toward this 41,000, almost 42,000, where the Magic Fibo is sitting. Same thing from the high to the current low. We start closing above that zone. Then it sets the tone for the Dow. Start moving toward 46, 47, blow off top toward 50. Could likely be. That is the direction we're headed. Question is, can we close above this to set the tone to go up here? Or do we get a little three-wave correction to get rejected and maybe Elizabeth, I'm coming to join you, honey, come sooner? We shall see. Any questions on that? Beautiful 618. You're trading the Dow. Look for this to go up toward that 41.8/42 range. See where the Magic Fibo is residing, 41.8 to 42. That's where we believe we're headed. And it probably takes several days to get there. Not looking for an instant couple of day reversal to get up there, but stair stepping our way toward that target. Nikkei. Nikkei is what I use for global liquidity. It too is likely, if we're going to get the blow off top in the States, Nikkei is going to get a blow off top. And we got to get what? We got to get back above this consolidation zone to set the tone to go up here to these extensions. But it is what it is right now. It looks like we're double bottoming, basically retesting this low we got from the unwinding of the carry trade. And we're likely going bouncing and headed toward the Magic Fibo. We start clear this 40,000, then it's game on for that blow off top. I don't trade the Nikkei, I just look at it for global liquidity. What's interesting, look at this. What we're talking about, because of the 618 retracement, we're likely going up here. Check out the software. Love the software. I don't do anything without the MPA P5 version 5.0 software. And we come over here to the S&P 500. What do we have going? Mr. Tucson, we're in the midst of an engage, disengage. What happens when we engage, disengage on the software? We go back to the high to make a new high. What's the new high? Running into the Magic Fibo, right? So even the software is in agreement with this engage, disengage scenario, and my weekly is reversing. Thing of beauty. Look at the PAI hook. We're just about to get the official cross. So what does that tell us about the daily? It's going to finish the upcycle. It's going to finish the upcycle. And where's price going to go? Up toward the cloud. If you use Ichimoku, that's part of our software package. Includes that and the Magic Fibo. So this is engage, disengage on a daily. The weekly's hooking and crossing, which means the daily PAI, the daily trend momentums are going to cycle. And what is a cycle? When the red, blue, and green. So red has to go back up here, blue has to go up here, money flow has to go up there, and then our trend momentum is going to go up there, and prices are going to what? Dance and move and groove and do its little jig all the way up toward that 5,700. Amen? How about that? Look at the Dow. It's ditto. We got a weekly, reversing, rinse and repeat. Got the PAI hook, and my daily is likely going to engage, disengage. And as this hooks and crosses officially, not officially there yet, but it's working on it. That means the probability, the daily, not only engage, disengage, but goes back to the high, makes new highs, is very high probability. NASDAQ, same thing, engage, disengage, starting to hook up. Got a weekly reversal. What else do you need, Mr. Tucson? Got a weekly hook, trend momentum crossing. So what does a weekly hook and a cross equal? That's the beauty of this. PAI hook, trend momentum cross. What does that equal? On a weekly chart, weekly hook and a cross equals a daily cycling from oversold toward overbought, oversold toward overbought. So I'm going to paint the Picasso of the software. This is going to disengage, and the red, blue, and green are going to start climbing each day higher and higher and higher. And these are going to continue higher, and this is going to continue higher, and price is going to continue higher to go back to the high, make new high, head toward that 20,000, and boom. Weekly hook and across, daily cycles. Weekly hook and across, daily cycles. So we see it across the board. Software setting up, technical picture is setting up. Bingo. Any questions? Then when we get up here, we shall see what happens. Again, we start closing above the Magic Fibo, not with a wick. I don't want to see a wick up above and then close below. I want to see a candle body close above this Magic Fibo. Then Mr. Tucson's game on for the next several months. We're going to stair step our way to that blow off top. First things first, we're going to get up here. Amen? All right. What else? Black gold Texas tea. We said the other day, Dan and others, highest probability, we're going to go visit that 65 to 68 range, 66, 68 area. Beautiful reversal. Moving up, the question is, do we stop and get that one more flush? I'm not convinced we're breaking out to these highs yet. I do think we're going to test this zone, and from the high to the current low, that's my 618,786 zone. Rinse and repeat. So do we get this and get rejected from the Magic Fibo? Comes up here, and each day that we kind of chop and grind, this is kind of sloping a little bit downward. And do we run into this at the same point to push this down to the 50 target, then the reversal? Or is this the beginning of a breakout for us to go up? I do think we're going to go higher, longer term, shorter term. The technical picture may need one more flush. Amen? So be sure you take profits already from 655 down here. We're up almost $10. I think we're going to get there. And then when we get there, be sure you're in a position of authority and taking profits, because I'm not convinced we're ready to go busting out. Well, ultimately, it is the same rules from that prior swing point high to the swing point low. How often does the magic Fibo come into the critical zone? It's doing it on ES, NASDAQ, Dow Jones, Russell, anything we look at. It did it for the euro dollar, pound dollar, etc. So this is very interesting that if we can start breaking above the magic Fibo on black gold Texas T, then yeah, it sets the tone for 84, 87, onward and upwards to the 90s. But that's a big if. So in the interim, Dan and others that love to trade black gold Texas T, the Beverly Hillbillies, definitely be in your position of authority after this huge bounce, because we may get one more flush before then another big push. And why are we even thinking push? Well, software. I don't do anything without the software. And WTI cash in this platform. And my daily is reversing. My weekly is hooked and crossed. Hint, hint, hint. That's kind of why we said we're going up to that 66, 68. We got a weekly hook. We got a trend momentum cross. We got slope. We got a little angle separation. That's it. Hook, cross, slope, green above the red, little angle separation in there. So what does a weekly hook and a cross equal? The daily cycling. And what is a cycle? But Gary, looks like the red and blue are already up there. Money flow is not. That is not a completed cycle. It is the red, blue, and green. And then trend momentum is not cycled. That's why I think we're going to get sucked and pulled into the cloud. My weekly hook and across states highest probability this daily will cycle in the coming days. And this baby is going to get sucked and pulled into that 66, 68 zone and test that magic Fibo. Any questions? Software, technical picture equals highest probability outcomes. So be careful once you're up here. We could potentially see a rejection to a new low. And maybe it's a war breaking out, an oil type thing with Iran, etc. And then we could get some huge spike if that's the case. And we could see oil go into and retest that 95 to 105 zone. Or this continues and we don't get rejected. And then we turn over and start slingshotting higher, higher. The weekly keeps going and we go breaking out earlier. So, Harold, looking at the target zones, we got to break above the magic Fibo before we can start thinking 80s and 90s. But first things first, we talked about this reversal down here with the daily weekly. And now we got a daily still with the weekly hook and across. The daily is going to cycle. So I made that statement days ago, early last week. Let's see on our thing here, right here. Let me refresh this one. Right there. Oil expected to grind up to 66, 68. How about that? Last week we talked about it. Even put it in my title. So what does that equal? That equals black gold Texas T going up to, where does the 66, 68 come from? Prior high to low, 618, 786 retracement, right? And even on the recent high to low, 618, 786 retracement from the bigger high to low, 618, 786 retracement, still puts us right in that same zone. So if we can start breaking above the magic Fibo, then it's a continuation to go much higher. Amen? So I'm forcing price, but if being long, I'm definitely putting profits in the bank when we get up here. Then if we can start closing above here, then I can go long and shoot for 84, 87. But we may, in fact, get this type of move where we come up into the zone, run into the magic Fibo, and get rejected to come down even to another new low. I'm going to watch this very closely. How do I know we're starting to lean more to the rejection and new lows? Well, then, Harold, you run a 2.2 from the current swing point low, and let's say we come up toward that swing point high, and we run into the Magic Fibo, we test that 68, 69, whatever, upper quadrant up here. Then if we start breaking back below 60, so if we see this, where we rally up into the target zone, we get rejected, and we can't hold this 60, 58 zone, then it's game on for my 49, 50 range. Right? So if I get so hint, 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 the bias is clearly we're going higher. We're going higher. Dude, we're going higher. Dudes, we're going, ladies, we're going higher. We're going to go test at 66, 68 minimum. Might even get a push toward the Magic Fibo, which at the moment is slightly higher. But again, it is sloping downward after this big move down. It's sloping in a downward direction. So as each day we grunt and grind a little higher, eventually we might start flattening out. But that still puts us near that 68, 69 zone. So I definitely think we're going to go test this. Hint, hint, hint. The question is, do we get rejected and not hold the 60, 58 zone? If we get rejected and don't hold that, then it's looking down to go below 50, right? Blake 55, head toward 50. Otherwise, if we do take this out and break above this zone, then it sets the tone Magic Fibo. We're going to 84, 87. But the software screamed bounce, and then it's screaming continuation to this target zone. Then it's what happens? Do we reject, break down to go lower, or do we break above to go much higher? Thing of beauty. Gold. This thing is parabolic. It's like the ES. It's like SMCI. This thing is going to crater. No way. Gold can't crater. It's risk on, risk off. Gold typically, when the markets are crashing, gold wants to soar. When the markets are ripping, gold tends to pull back. So the technical picture, regardless if the markets soar, the markets crash, gold is due for a pullback. We haven't been to the Magic Fibo on gold in a very, very, very long time. So we've come close a few times, but this screams these far extensions. Look at that. 34, and we even went above that near 35. It's insane. These extensions were going parabolic. We need a retracement back to the sweet spot. And if the daily Magic Fibo doesn't hold, then we got the 3-day. We got the weekly. This thing could be substantially do a psychology of a market cycle, come back to the plateau. The question is the plateau around here where the Magic Fibo is, right? Right there, that plateau, right where we are for the daily. Or do we go more toward the next plateau for the 3-day, or this plateau over here where the weekly is? So there's the daily. Here's the 3-day. I got my little boxes set up for you. And that's that plateau. And then we got the weekly, which is right around this zone, which is this plateau zone, the bottom of it. So be careful. Yes, gold could go higher, but the more our markets start ripping, if we get that blow off top, I think that's going to allow gold to give us a nice pullback of hundreds of dollars. And this parabolic move up needs to come back to at least, in my humble opinion, to a daily Magic Fibo, which puts us somewhere around that 2,800. Ouch. From 34 down to 28, substantial move. Amen? So I'm bullish gold. Don't get me wrong. We get this big correction. We come down here, I salivate. We come down to 3 day, I just get on my knees. We come down here, I really get on my knees and look to the heavens and go, thank you. Because this thing is going to go much higher long term, especially during the period over the next multiple years. We start talking about Elizabeth, I'm coming to join you, honey. Here comes the big one. Remember Fred G. Sanford with the Sanford and Son? He had his little bow legs and he'd wiggle around. I love that show. Hey, Elizabeth, I'm coming to join you, honey. Well, when that happens, where do you think gold's going to go? I've been calling for 3,000 for a while. Next stop is at 4,000, 5,000 up there. I do think it's going to go way higher in the years to come. Extremely bullish gold. But gold, all of them, don't just move parabolic forever. They get the big come back to reality of a market check, a psychology cycle, and it's due. Long overdue, especially with this big run. Amen? Any questions? So be careful. Take your profits. We're at these extensions upon extensions upon extensions, and it's just screaming pullback. But when it does, again, we come down here, great buying opportunity. Comes down here, wonderful buying opportunity. Comes down here, unbelievable buying opportunity. We're talking more than a double. We come down here, we're still at a double when we come down here because the target is what? 5,000. I don't see us going straight up to 5,000 because I think our market's going to get that blow off top, and this is going to get us a correction during that period. So what are we saying? Gold, as we go into the fall, is likely to fall down to at least a daily Magic Fibo, if not deeper. And the deeper it goes, the more you salivate to buy gold. Amen? And then you look at this big picture. This is interesting to me, kind of like Bitcoin and Ethereum is to gold to silver. Underperforming Ethereum, underperforming silver. Let's do a weekly. I guess we can do it from a weekly. Now let's do the monthly. I think I need that bigger picture. Yes. So from this prior high to this low where we hit the Magic Fibo on a monthly, we did what? We went breaking out. We hit the 1272, we hit the 1618, we hit the 272, we hit the 2618, and we're almost kind of trekking toward that 368, 3618. Look at silver. Silver is lagging. Come out to that monthly. Look at that same scenario. Get the both big pictures. Either one were underperforming. From this high to that low, this is the bigger picture. We're nowhere near all-time highs. On the most recent one, so it can be apples to apples on one I showed you with gold, this is this 2011 top and reversal. Look at where we are. We're struggling below a 618. We tested it and we failed. Underperforming big time. But imagine, Harold, as I think silver is way undervalued, and it needs at some point silver is going to go ballistic. It is literally going to go and do a blow off bubble pattern. This is underperforming. Gold has already done it. So imagine if silver starts to do what gold has done. Let's go back and remind you. Gold went up to what? 1272, 1618, 272, 2618, and moving toward our 3618. Silver is nowhere near, it's not even breaking the 618 to the upside, much less. Look where the 1272, 618, 272, 2618, moving toward the 3618. So if silver was to catch up, that means we have to go popping somewhere around that 111, between 111 and 148 to catch up. Oh, isn't that exciting? Do I think silver's going to get up there at some point? You betcha. Oh, yeah, it's going to get there. In my humble opinion, silver is so underperforming. And when we finally start breaking out above 35 and closing above that 35.41 range, spot on to go to 55.60, 73, and eventually start ripping and catching up with gold. Got it? I don't mean gold's pricing, but I mean gold's extension reaches. And look at SLV. Love SLV. SLV from that prior high to low, we already closed above the 618 in the SLV. So that is screaming done deal. 75% we're going to 60, 70 plus we're going to 70, and we're sitting here at 30. Double plus, right? Well, what if SLV does what gold has done? We go to 1618. We push to 272. We push to 2618. Insane, isn't it? That we could start fantasizing that you think silver can get to $500? Sure. It's a finite uh, mineral and they use it in literally everything. So, yeah, we could see this. Now, before we get too excited about, man, is he out of his mind? Silver's going to go to 300? Well, right now we're going to 60, 70. Done deal. It is a done deal, in my humble opinion. But what about the bubble pattern on gold coming back down to doing maybe a monthly, a weekly, a daily type of retracement? What if? Well, silver is going to make that move. Let me show you on the zoom in, daily, bring this up. So we're testing right now, which is danger zone, from the recent high to low. We're testing the 618786 zone. If gold gives us that correction, which is coming sooner than later, but no later than later, silver could do the same, and we get a flush down below 25, right? Even the bigger picture, this high to this low to this lower high, sets the same zone from this recent high to low, and you do the 3.2, put you in the same place. That's why you see these lines overlapping each other. That's from both of the high, low, lower, low, or this high, low, lower, low on the smaller scale. Both roads lead to about 25 and lower. Now, admittedly, if gold continues to go higher, it's probably going to pull silver with it. But if gold does pull and give us that pull back into the fall, I expect silver will give us an opportunity to get in. And I have some junk bids down here for SLV sitting at 25 and lower that I want filled to buy more shares for us to do what? Not ride it to 30, 33, 35, none of those target, not even 38, whatever, 36, 38, 40. No, not even to 46, 49. Remember where we're going. We're going up here to 60, 70. That's the target, 60, 70 zone. So we get down 25 and lower, we're talking about a triple to get up here. So I'm big on SLV, and I do think we're overdue for gold to give us a big retracement. And if so, silver is likely going to give us that retracement down into the 25 and lower. And that's why if these junk bids get hit, the lower it goes, the more I buy to shoot for what? 60, 70. $60, then $70. And looking at that bigger picture, Harold, it excites me because it is what it is. Now I can do a weekly. It is what it is. We already have set the tone by the recent all-time high down to this COVID low. We broke above the 618. We've been above it. We're above it right now. So not only did we get a daily candle body, we got a weekly candle body, we got a monthly candle body, we got everybody's candle body close above that zone. So the rule is we have a 75% chance we're going to 60, a 70 plus we're going to 70. And if we get that dip below 25, game on. Well, is it that big a difference if I buy 25 or lower? I buy it at 30, even though it's going to double from where we are. No, you can be in it right now. I got some little SLV, but I'm looking to add upon we get that gold pullback to salivate. Same thing with silver. If we can get to 25 and lower, that is like buying Bitcoin at 15,000. That is what we talked about. Speaking of crypto, any questions on gold and silver? We're going here. No ifs, no buts, no ands, no exceptions, in my humble opinion. We may get one more flush down to 25 and lower. And anything like that, or if you don't want to wait, nibble some shares now. Because it doesn't, I can't tell you it's going to be the end of the year. It's going to be 1st of February next year. It's definitely going to hit these targets sooner than later, but no later than later. And owning the stock means I can wait 6 months, a year, whatever it takes, and I can more than double my money. If I buy it right now, I'm going to more than double the money. If I get the dip below 25, I could triple my money. Amen? All right. I think you get the point. So, crypto, Bitcoin is making its move. Is this the breakout, or are we going to get one more flush? What are we looking at? Well, we're breaking the downtrending lower high line. That's a start. And we're above, let's check the daily. We're testing the daily Magic Fibo as we speak. So this is looking good. So we got to get across this zone up here of resistance. Once we do, it opens the door up here to the prior 102, 105 area. We break that, then it could be the breakout we've been looking for. But be careful. I do think we're going to see the same type of policies we talked about in all of these. We're breaking from below the Magic Fibo. We've been testing and rejecting and testing and rejecting, testing, reject. Now it looks like we're finally breaking out. Would not be surprised, Mr. Tucson, as we rally, we come back and retest it to then start breaking out much higher. So if you were with us and taking heed, how many days, weeks, and months that I talk about Bitcoin at 20,000 and lower is a steal. It is a crime to be able to buy this so low, because our projected target was 150 to 170, but it went from below 20 up to 109, more than a 10x. Almost, well, not 10x from the low, but from 20,000, 5x to over 100,000, almost a 6x. So are we going to get to the 10x 150? In my humble opinion, yes. So the bulk of the Bitcoin move has already been made, but I still think there's more to come, right? 150, 170. Where does that come from? Every 4 years, we have a halving. Every crypto run post halving, 12 to 18 months post halving, Bitcoin tops out at an all-time high. Then it proceeds to make a crypto winter low before the next halving. Then it starts to appreciate into the halving. Then it goes vertical post halving, 12 to 18 months. So we're not done. We're just hitting the 12-month period, and we still got 6 more months. That puts us into the fall, where I think we'll be at that 150, 175 target. Amen? So this is interesting how Bitcoin went on to make all-time highs, pushing to 148, 1272. We're working on the 1618. Every prior halving, Bitcoin's at least done a 1618 move. Go back to the weekly, stretch this out. So we know a lot about crypto that we didn't know about years ago because it was relatively new, but it's like clockwork. Every prior halving, which has been four of them, right? Back in 12, 16, 20, and now 24. The next one is in 28. So we get the post halving, we get the big run, then we get the crypto winter low. And then from the post halving crypto winter low, where did we go to? This one went to a 272 from the 16 post halving into a 272 extension. The next crypto high to crypto winter low before the halving in 2020, where did we go? We stopped right around that 618, 1618. So every year post halving, we go at least a 1618, in which we did a 272 in 2012 to the 2016 halving. And then from 216 into 220 halving, we did a 1618, high to low, 1618. So where are we going this time? Same rule, crypto winter high. There's a lot of bars and things covering on the chart talking about these pullbacks. Let me go ahead and remove some of these to get some of that verbiage off of here. If I can grab all that, bunch of them on here, so I can start seeing my targets. But you see the same point, cleaning it up slowly but surely. But we can see the points that Bitcoin has done every time. Why would this time be any different? I don't think it will be. So from the last 2020 all-time high into 21, we got the crypto winter low where Bitcoin came down to our 15,000 range. See right there, right around that 15,000 was the low. And I kept saying anything below 20,000 is a steal. It's a crime. Be able to buy it this low. And where's the 1618? 175. Rinse and repeat. Interesting, isn't it? So the next halving is in May, roughly May of 2028. So what do we expect when Bitcoin tops out at all-time highs again? In that 150 to 175 area, could overexceed, could likely, but I still think we're going to at least get to that 150, 175 range. At which point we then get a crypto winter low coming into 2026. Then we look to buy again. Just like in 21, we're looking to start buying on the bottom reversal. 22, bottom in 26. Before that was right around 18. And before that was over here in 14. So every 4 years, 14, 18, 22, 26 is the plan for the crypto winter low. That's the best buying opportunities for crypto by far. Before the halving, you buy it and then you hold it to 12 to 18 months post halving. And you look for these extensions. So let me do you a little bit of math on the next move. So once we top out, let me start zooming in on this, and I'll go to like a daily chart so I can look more at current price action. And here's our prior crypto winter low to where our target is up here, that 150 to 175. Let's do a little math on this and say, okay, what if we get the typical reversal and we do the next high to low? So we're going to come up here from that 150 to 170 range. I'm going to split the difference, say 160, 165. And we come all the way down to, I think Bitcoin will reverse somewhere in that 50,000 to 30,000 range. So let's just say, let's be a little more optimistic. It comes down to 50,000. Now let me remove some of these lines on here because there are so many of them. But look at where it puts Bitcoin's next run into the 2028 halving, into the year 2029. So let me get this out of the way. Let me get a few more of these out of the way so I can remove those lines. But it's interesting to where Bitcoin's going to be next. Rinse and repeat. So I got to get this guy out of the way. Labels in the way. But look where that potentially puts us. And we do this next high to low, and the high would be around 160 down to about 50. Look where my 1618 is, somewhere around 230. Now we don't have the high, we don't have the low yet, but once we do, like we did over here from that prior 60,000 high down to 15,000, we know that 1618 is up here at 175. Well, we can do the same when we finally top out, we get a retracement and excuse me. And then we look for some huge moves after that. Any questions? So when it comes to crypto, we top out every 4 years. That was in. Go back to the weekly. Just like every 4 years we bottom, and every 4 years we tend to top out. We topped out in 17, 21, 26, or 21, 22. So we're going to be topping out in 25. From 21, 4 years is 25. And before that, 17. Before that, 13. Everybody getting the math? Post halving, 12 to 18 months later, puts us into 13 after the halving in 2012. Then we topped out in 17, 12 to 18 months post halving in 16, end of 17, right? December-ish. Then the next 4 years, we got our crypto winter low, crypto winter high. We topped out in 2021, 4 years later. We got our crypto winter low, crypto winter high. 25 is when we're going to top out where? My humble opinion, at 150 to 175 target. So the next buying opportunity would be, where are the lows? Come back here, 18, 22. Next low should be 26. At least that's a good buying opportunity in 26, where we start to talk about the bottom. We did a tremendous job this past year, right, everyone? Where we talked about Bitcoin bottoming somewhere between that 20,000 range. I knew it was going to be somewhere in 25 to 20. When we got to 15, that's why I said anything below 20 is a steal. And sure enough, and then you go back and do history from where these lows are. Bitcoin has always done at least a 10 to 20x, 10 to 20x. 20x was there, 10x here, 10x, 10x. So each time it's been at least a 10x. So from 15,000, 10x is 150. That's the 150 target. And from the crypto winter high to low, the 1618 is the other target, 175. That's why the target is 150 to 175. And we'll do the same thing in 26 when I tell you, man, buying Bitcoin at below 50, below 40, below 30, whatever it ends up being, when we start to tell you it's time for nibbling in 2026, late 26, then it'll be your opportunity to run price back to the 230s, 300 or higher on Bitcoin. Amazing, isn't it? Rinse and repeat, rinse and repeat. Every 4 years, we top out 17, 21, 25. Every 4 years, we bottom out 13, no, 14, 18, 22, 26. Hint, hint, hint. Next halving in 2028. So when we start buying in late 26, early 27, when do we sell? Into 2029. Fall of 29, roughly. Kind of like we're doing this year, fall of 25. Got it? I know I've been around the world on all this, but that's what it says. So with that, I'll say good luck, God bless you, may the pips be with you. Ethereum, as I was mentioning, with the underperforming, I still think Ethereum is going to be like silver. The coil is winding up for an explosion. And is it going to happen? Is it not going to happen? We're down at these lows. and we haven't really recovered yet. But if Bitcoin makes this run, I think this will stimulate Ethereum to go breaking out. Even if it's a total dud and we go back to 4,000, it's still more than a double. So I'm not giving up on it. But once we start breaking that 4,000, I think Ethereum's going to go exploding to the upside, 6, 7, on its way to 10. But we got to get there first. And this was a very steep retracement, extremely steep. But from the low to the high, it's still holding that zone. So no reason to believe we can't go to these extensions up here and make some new all-time highs. I haven't given up on it, but it is what it is. So Bitcoin goes ripping, Ethereum starts to catch up. Man, it should be in the stratosphere by now. But it hasn't. Like silver, underperforming. But some days Ethereum will start to catch up with Bitcoin again, and silver is going to catch up with gold. Got it? All right. So take care. God bless you. We love and appreciate you. As I like to close, that's it, and that's all. Join us again tomorrow.